Hi children, I am going to continue the lesson. Now let us have a quick recap of what we learnt in the first part. The lesson is about the credit arrangements in the economic system, and we learnt about how bank deposits, what are the main functions of banks, accepting deposits and giving loans, and what are the terms of credit, and how this entire system of finance is supervised by the Reserve Bank of India, and how people take loans from the bank, and how people deposit their money in the banks, and what is the primary source of income for the banks we learned, and why the requirement for credit is increasing day by day for people, for what purposes they are getting loans from the banks or any other source, and two different credit scenarios also we have seen, Alisha and Swapna's case, how Alisha earned profits and how Swapna was pushed into debts, and in rural areas what is the main demand for credit, that is we learned, and we also learned about terms of credit. Terms of credit means interest rate, collateral, documentation requirement, and the mode of repayment. These are called as terms of credit. And also we started variety of credit arrangements, examples from a village. We learnt about the first example, that is Vasu, a small farmer. And now the second example of credit arrangement is Arun. Arun is a farmer who has 7 acres of land. For cultivation, he takes a loan from bank, and the rate of interest charged by the bank on the loan amount is 10% per annum, and he can repay at any time within next 3 years. That is the condition. And Arun is able to repay the loan after the harvest, as the rate of interest is very less comparatively, and he sells a part of the crop and repays the loan, and he stores the remaining crop in a warehouse in the nearby town and applies for a fresh loan against the cold storage receipt. The bank offers this facility to the farmers who take crop loans from the bank. And the third example of credit arrangement is Rama. Rama, she is an agricultural laborer and she has no land of her own. So, she works in others' fields. Rama has no work for several months, and so she needs a loan even for her daily expenses. And every time Rama takes loan from the landowner or employer, the landowner charges 5% rate of interest per month. Remember, it is per month. And Rama repays the money by working in his land. Every time before the previous loan is repaid, Rama has to take another fresh loan. Though the landowner does not treat her well, she continues to work for him, as she can get loan from him whenever needed. He is giving loans, so she has to work. Though he does not treat her well, she continues to work for him. And this example indicates that the only source of credit for the landless people is the landowner or the employer. They cannot take loan from any others because they are bound to take from them only, because they cannot repay the loan, they have to take another loan again, he gives. He charges higher rate of interest. So though they do not treat them well, they have to continue their work with those people also. Now there are mainly two sources of credit. The formal source of credit, that is credit given by the banks and cooperatives, it comes under formal sources. And informal sources of credit means this includes loans from money lenders, traders, employers, relatives, friends, etc. Now, see the pie chart once. You can see that 25% of the loans are given by the commercial banks. Out of total loans, 25% are being provided by the commercial banks, and cooperatives are providing 27% of the loans, and money lenders are providing 30%, more than these two. From money lenders, the poor people, they take loan from money lenders only, so they are providing 30% of the loans. So there are several types of cooperative societies, such as farmers cooperative society, weavers cooperative societies. There are many cooperative societies, and all these extend loans at a lower rate of interest. Banks and cooperatives also, they charge a low rate of interest. And all the other informal sources of credit, they charge a higher rate of interest. Now, the Reserve Bank of India takes all the care to see that banks give loans not only to profit-making businessmen and traders but also to the small farmers, small-scale industrials, etc. Other than RBI, NABARD is another organization which provides credits in rural areas. What is the full form of this NABARD? National Bank for Agriculture and Rural Development. National Bank for Agriculture and Rural Development, and this NABARD, it provides credits in the rural India. It is a formal source of credit in rural India, and in recent times the amount of loans given by banks for agricultural purposes are increasing, but still there are many farmers who are not able to get bank loans for agriculture. For example, in 2011, out of 14 crore farmers, only 5.3 crore farmers could take loans from the banks. And that is to say that more than 2/3 of the farmers don't have access to bank loans because they have to submit collateral. That is the main problem with the bank loans. They require collateral, and most of the people, they don't have collateral. That means nearly 9 crore farmers have to depend on informal sources of credit like money lenders, employers, relatives, etc. And these people charge a very high rate of interest on loans. Now, new initiatives. The RBI is taking all the necessary steps to improve the financial access to people in rural areas by establishing branches in rural areas. Sometimes cooperatives and bank branches are also being started in rural areas, or by appointing business correspondents. Business correspondent is an approved bank agent who provides basic banking services by using a micro ATM. And these BCs, that is business correspondents, encourage people in rural areas to open bank accounts, to save their money in banks, and also make use of loan facilities provided by banks. And biometric smart card identification systems are used to open these accounts. And thus, these BCs bring awareness among the rural people, most of whom are illiterates. Now, another one is AEPS. AEPS means Aadhaar Enabled Payment System. It is a new payment service offered to banks and financial institutions using Aadhaar card number. And customers have to link their Aadhaar card number with the bank offering AEPS services. By using AEPS, the following services can be availed. What are those services? Cash deposits, that means depositing in the bank. Withdrawals, we can take a withdrawal from the bank account. Enquiry regarding balance, if we want to know anything about our balance in the bank account, we can know. And fund transfer, we can transfer fund from our account to another account also by using this APS. Now, let us see the differences between formal and informal sources of credit. Formal sources of credit means banks and cooperatives come under formal sources. Informal means money lenders, employers, relatives, friends who charge a very higher rate of interest. Formal sources of credit, they are supervised by the RBI. Reserve Bank of India supervises them. But informal sources of credit, there is no organization to supervise the activities of informal sources of credit. And the next difference between these two is rate of interest. Rate of interest is very less. It is fixed and also reasonable. In respect of formal sources of credit, that is banks and cooperatives, they charge a low rate of interest, and the rate of interest is fixed for all, it is the same, and it is reasonable. Whereas informal sources of credit, very high rate of interest, varies from person to person and from time to time also, and from credit to another credit arrangement also it changes. And formal sources of credit, they follow certain rules and regulations which are framed by the RBI. Whereas informal sources of credit, there are no rules and regulations. They make their own rules. Though there are some rules, they never follow them. They make their own rules. And formal sources of credit, they have to follow certain expectations of the government. And it is not required in respect of informal sources of government. The government expects from the formal sources of credit to provide more and more loans to the needy people. And there are some expectations from the government regarding formal sources, but there are no such expectations from informal sources of credit. And these people, so formal sources of credit, that means banks and cooperatives, they cannot use illegal ways to collect the loan amount. If the borrower fails to repay the loan also, they cannot use any illegal ways to collect their amount. Whereas informal sources of credit, they use all the illegal ways, and this leads to suicides of the borrowers sometimes. And formal sources of credit, they need collateral as a guarantee, any asset or property as a guarantee against the loan. But whereas this collateral is not required in respect of informal sources of credit. Now, many of the state governments, they have made laws to protect the people from these informal sources of credit, like money lenders, employers, etc. But they are not enough to force the money lenders to charge a lower rate of interest, and they are to be implemented effectively. Strictly they are to be implemented. And here, in formal sources of credit, because the rate of interest is low, the borrowing is reasonable. They have to pay loan plus interest little amount only. But whereas in informal sources of credit, amount to be repaid is greater than the income of the borrower, because they have to pay higher rate of interest, and if they are not able to repay within the time, it becomes more and more. So amount to be repaid is greater than the income of the borrower. So it leads to increasing debt. Now for all these reasons, banks and cooperatives should extend loans to more number of people. And then many people can borrow money for varieties of purposes, to grow crops, to do any business, to set up any small scale industry, etc. And if they do so, their income will increase, and thereby their standard of living also will increase. And ultimately, the country will develop. And that is why cheap and affordable credit for all is very important for country's development. Now here you can see in the slide, poor households, they are able to get 15% of their loans from formal sources, from banks and cooperatives. Whereas rich households, they are getting 90% from the banks and cooperatives. And poor households from informal sources, they are getting 85% of the loans. Majorly they are depending on the informal sources of credit. And rich households, only 10% of their loans they are getting from informal sources of credit. Now, what do all these suggest? That means, first, we have seen that the formal sector meets only about half of the total credit needs of the rural people, and the remaining needs are met from the informal sources of credit. And most of the loans from the informal lenders, they carry very high interest. They charge very high interest on loan amounts, and they increase very little. The income of the borrowers is increased very little. Thus, it is necessary that banks and cooperatives increase their lending. That means they should lend more and more in rural areas to save the poor people from these money lenders and other employers, because they charge a very high rate of interest, and the conditions also laid down for the repayment are very harsh. So that the poor people in rural areas, they will depend less on the informal sources of credit. And secondly, there is a need to expand formal sector loans. That means banks and cooperatives should provide loans to more number of people and see that everyone is able to get these loans. And at present, only rich households are able to get more loans from formal sources, as they have collateral to provide, and majority of the poor depend on informal sources of credit. We have seen already in the chart. The poor should also get the benefits of formal sources of credit. Now, self-help groups for the poor. This already you have learnt in 8th class. Again, we are going to repeat it. Self-help groups. Collateral and proper documentation, these two are must for getting loan from banks. They have to produce a collateral or proper documentation, both are required to take a loan from banks. And lack of collateral is the major reason which prevents poor people from taking loans from the banks. Why poor people cannot take loans from the bank? Because they don't have collateral. And on the other hand, the money lenders know the borrowers personally, so they don't demand collateral. They do not reveal the transactions to the poor borrowers and harass them. And sometimes, for granting loans, informal sources make it conditional to sell their produce only to them, or to force them to do free labor for them. And in recent years, the government and the non-government organizations, they have tried out a different way of providing loans to the poor people, and that is self-help groups. And the idea of these self-help groups is to organize rural people into an organization, in particular women. They organize themselves into an organization, into small self-help groups, and they pool in all their savings. And each and every self-help group can have 15 to 20 members. And usually they belong to one neighborhood, or they meet frequently each other, so they can form into a group, and they save their savings in one place. 25 to 100 or more they can save. Any amount which is possible for them, they can save every month, depending on the ability of the people. And members can take small loans also from the group itself. Whenever any member wants any small amount as loan, they can take it from the group. And on this also a little rate of interest is charged by the group. And the group charges interest on these loans, but this is still less than what the money lender charges. What the money lender charges on loan amounts, it is very less when compared to that. So, and after a year or two, when the group becomes regular in savings, then the bank comes forward to give loans to these self-help groups. The group becomes eligible for loan from the bank. And this bank, this loan also is given in the name of the group itself, and ensures that the loans are paid back. It is only on trust that these loans are given by the bank, because these groups, they become regular in their savings. Now they become eligible to get a loan from the bank without any collateral. They can get a loan from the bank, and the loan is sanctioned in the name of the group itself. And all the important decisions in these self-help groups regarding savings and loan activities, how much loan to take, all these decisions are taken by the group members. All the group members together, they sit and they decide. And the group only decides the terms of credit. How much interest is paid, in how many installments they have to pay back. All these are decided by the group members. And also, for repayment of the loan, all the group members are jointly responsible. If any member fails to repay the loan, all the other members, they take up the responsibility of repaying the loan. And because of this feature only, banks are willing to give loans to the SHG groups. And though they don't have any collateral, banks come forward to give loans only because of this feature, because all the other members, they take up the responsibility of repaying the loan. And for these SHG loans, collateral is not necessary. Collateral is usually kept by banks and for giving any loans, but it is not necessary for the SHG groups. And these loans are applied only to create self-employment opportunities, for creating self-employment opportunities, or for cottage industries, or for buying a machine. For instance, members take small loans for releasing mortgage land, for meeting working capital need, buying seeds, fertilizers. For all these purposes, they can use this loan. For buying house materials, for buying a sewing machine, and they can carry on tailoring business. So like that, these HHGs are the building blocks of organization of the rural and urban people. They provide a lot of help to the people in rural and urban areas. Not only women become financially self-reliant because of these self-help groups, because when they take loans, they become self-reliant, because they start a small industry like and at home, and then they can earn profits slowly. They will increase their earnings. And the regular meetings of the group, these group members, they meet regularly, and they discuss many social issues in these meetings. Now let us see about the cooperative societies. combined management. Cooperative policy was formulated based on values like self-help, self-responsibilities, equality, etc. And main aim of these cooperatives is not only to improve the conditions of the poor farmers but also to improve the socio-economic status of the poor people. And to achieve this, some people with same needs come together and form cooperative societies. And these are agencies formed with a group of individuals. At least there must be 10 members to form these societies. Now, cooperative societies and government help. These cooperative societies, they collect their capital amount from the members. The members of the cooperative society themselves, they give their share to form the capital amount for their maintenance. And initially the government supports, financially the government supports, and gradually it withdraws its support. Initially it supports the financial help and gradually it withdraws its support. Government provides support to cooperative societies in 3 ways. Supporting in the form of laws. It makes some laws which are favorable to the cooperative societies. Like Cooperative Society Act, bylaws of the cooperative society, and secondly, it provides financial support in the form of investment in shares, by investing in shares, grants, disbursement of loans, and giving surety and subsidy on taxes, fees, etc. And the third way is supporting in other forms like appointing staff members for the cooperative movement progress and technical support and cooperative training facility. All these are provided by the government. The next one is types of cooperative societies. You can see there are 2 types of cooperative societies. One is credit cooperative societies and the other one is non-credit cooperative societies. Under the 2 cooperative society acts like 1964 and 1995 acts, several cooperative societies were established in Andhra Pradesh. And apart from the agricultural sector, several cooperative societies like for handloom cooperative society, housing and marketing societies, cooperative societies, poultry cooperative societies, all these are also established to provide some help to those sectors, and an organization which provides loan facility to the needy people of the society. And some other societies will catch the need of the society members in production, sales and maintenance. So in this way, the cooperative societies are formed to provide loans to the needy people at a lesser rate of interest. And there are 2 types of cooperative societies. The first one is credit cooperative societies. Agricultural credit societies, state cooperative society bank, district cooperative central bank, primary agricultural cooperative societies. These are credit cooperative societies. And the second one is non-agricultural credit cooperative societies. And urban cooperative bank, employees cooperative credit societies, industrial cooperative societies, cooperative housing societies are examples for non-agricultural credit cooperative societies. And the second variety of credit cooperative societies are non-credit cooperative societies. Cooperative marketing societies, cooperative processing societies, milk producers cooperative societies, water resources management cooperative societies, consumer cooperative societies, handloom cooperative societies, cooperative training centers, cooperative electrical societies, all these come under non-credit cooperative societies. And in addition to the above said societies, the cooperative societies for backward classes are also established. They extend their services to the backward classes. And NABARD releases funds to State Cooperative Bank and in turn releases to District Cooperative Central Bank. First the NABARD releases funds to the State Cooperative Bank and then it releases funds to the other lower cooperative societies. Now, see the in-text one. The world's first cooperative society was enrolled on 24th October 1844 in Rockdale of England. It is a town in England, Rockdale town. And there the world's first cooperative society was enrolled on 24th October 1844. International Cooperative Alliance, ICA. It was originated in London on 18th August 1895. And ICA, that is International Cooperative Alliance, head office was first in London, and then it was shifted to Geneva in 1980. And International Cooperatives Day is being celebrated every year on the first Saturday of July. From 1923 onwards, it is being celebrated. And in our country, as per Indian National Cooperative Union guidelines, all the states conduct Cooperative Week celebrations from November 14th to 20th. Now, financial literacy. Financial literacy is the process of equipping oneself with knowledge and information on financial matters. If we know where to invest our money, where it will be more beneficial, where will be more benefited, or where we can get more profits, if we know all these things, where to invest money, how to invest money, that is called as financial literacy. So it is the process of equipping oneself with knowledge and information on financial matters. And this financial literacy helps people to have better financial planning. We can plan our financial procedure in a better way. If we know where to invest, we will invest our money. We can get profits. We can get interest on that. Which bank gives more interest and where we can get loans. All this information is called financial literacy, and it helps to plan our financial things in a proper way and to get a better position, to achieve their financial goals. Everyone will have a financial goal to earn 1 crore, 2 crore, or whatever may be the financial goal. They have their own goals. And to reach these goals, this financial literacy helps. It aims to inculcate, it also cultivates the habit of saving money. Some people, they don't have the habit of saving, they spend only. But whatever money they have in their hand, they spend it. And this financial, if we have financial literacy, the knowledge of how to save our money, this inculcates the habit of saving money and also improves the understanding of financial products. And this financial literacy material is available on the website of Reserve Bank of India, that is given here, www.rbi.organization. And this RBI has developed comics on financial literacy subjects. For the benefit of the school children, RBI has developed comics. There are 2 comics mentioned here, Raju and the Money Tree. This is one comic, and Mani Kumar and Monetary Policy. These are the 2 comics which are developed by RBI. These are the names of the comics that can be downloaded from the RBI website mentioned above. And in addition to the above, for the benefit of word illiterate persons in rural and urban areas and remote areas, State Level Bankers Committee, SLBC, Andhra Pradesh has prepared an audio CD on the benefits of saving with banks. To bring awareness among the illiterate people in rural and urban areas, this CD has been prepared, audio CD has been prepared by the SLBC. SLBC means State Level Bankers Committee. Now the lesson is over, and as usual I am giving you homework. Read full lesson, underlining all the key points, and complete the blanks in the material.